It may not appear like it, but Bitcoin is on the edge of a literal cliff, sitting at $104,600, just $200 away from the weekly range high. A loss of this weekly range high could result in a large correction for Bitcoin, whereas sustaining above this level will likely result in a continuation. In today's video, we are going to be discussing the nuances of this statement, as well as diving deep into the trigger for a potential break upwards and break down. We are going to be discussing a hidden pattern developing on the short term, which if broken will result in a continuation to one of the two critical levels of support and resistance. We are also going to be diving deep into the total cryptocurrency market cap, as it is currently retesting the 50 EMA at the critical $3.19 trillion level. We have so much to be taking a look at today, so let's go ahead and jump in. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contact our admin, check out our 50+ month trading track record, watch a 10-minute video showing you inside the VIP channel, and of course, you'll get access to our main VIP channel and exclusive group chat. Go ahead and check it out. We'd love to have you in there. Let's dive into the content. So taking a look at Bitcoin on the short term, over the past 48 hours, we have seen some aggressive sideways consolidation. This is partly as a consequence to the anticipation and build up into the interest rates. And of course, yesterday being or maybe it's still today, American time, a public holiday. I think it's Juneteenth, you guys call it over in USA. So with that, we do see a reduction in overall volatility and of course, volume, resulting in generally sideways consolidations with sporadic moments of liquidity or liquidity grabs, as we have seen. In this instance, we are developing a sideways descending trend line and a upward ascending trend line. This overall establishing a symmetrical triangle pattern, what we would call a pennant on the short term. Now, these consolidations are generally considered to be neutral consolidations. However, the direction of which we enter these consolidations often do indicate a slight bias to the direction of which the price is likely to exit. Meaning, although this is a neutral pattern, it is slightly more bearish than bullish. Now, we're discussing that more in our short-term analysis in just a moment, but overall, this short-term pattern is going to play a massive role in determining whether or not we see Bitcoin break down and continue into that $100,000 region, resulting in what would likely be a weekly close below that weekly range high, confirming deviation and breaking down on the RSI, or whether or not we see a rally up into this $106,000 level, which could facilitate a continuation back to 110. So this is really a very important consolidation, which is very likely going to impact the direction of Bitcoin on the short term and maybe even on the high time frame. Hence why we're discussing that today. Let's move over to our market data, 24-hour volume and liquidations. Jumping right into it, liquidations and volume overall quite down for the 24 hours. We've got 39.64% reductions in volume and 58.54% reductions in 24-hour liquidations. Volume 145 billion. Liquidations, 91 million. Of the 91 million, a near even split from longs to shorts, telling us again we are very much in a consolidation, a period of indecision and indecisiveness over here. Moving over to the DXY, the DXY did see a bit of a push upwards in the short term following the recent announcements from the Federal Reserve, specifically around the adjustments to long-term interest rate median projections actually going upward, again indicating potentially they are foreseeing the economic climate in the future to be worse than expected. That is mainly due to the current uncertainty as a consequence to them potentially having to now drop interest rates at a later period or not as soon as they initially anticipated a year and a half ago. So we do have the forecast to be higher. Again, that signals potentially later interest rate cuts. That's what that really means, meaning the dollar has pushed up a little bit in strength. Looking at the S&P 500, we still have this weakness developing here. Now, don't get me wrong, the S&P 500 is an uptrend, but with all uptrends and downtrends, there are nuances to the trend, right? We are seeing a period within this uptrend of weakening strength. So what we call this general exhaustion, right? We are seeing the sellers are slowing down or the buyers are stepping in, and we are seeing this because we have got higher highs here on the price action, but we've got lower highs on the RSI. This is representing a classical bearish divergence, indicating exhaustion is developing, meaning the price action is grinding up, but it does not have the strength to sustain, increasing the likelihood of a pullback. For us to see a pullback, we need to start breaking these lower high or these higher lows. So we've got a higher lows here, higher lows here. If we drop below this 5,900 level, we would like to see a correction back into these levels at 5,700. For us to see a continuation into these prior highs and new all-time high, we would need to see the RSI break that trend line. If we see that trend line break on the RSI, we will likely absorb. That would indicate that the exhaustion which has been present here has been fully absorbed and the price is ready to take that next definitive move toward the upside. So overall, we are seeing some weakness develop in this uptrend. Again, whether or not that weakness is a result of the geopolitical tensions around the conflicts in the Middle East and in Israel, or of course the interest rate news coming out a little bit worse, is besides the point. The reality is the market is made up from buyers and sellers, real-time purchases or sales, and a lot goes to drive people's emotions, which dictates people's opinions. That be news, that be emotion, that be speculation, that be just pure gambling, that be strategy. The list goes on and on. So we have to take it at face value, but if you don't take it at face value, where do you draw the line? So exhaustion is present. The macro trend is bullish above 5,700. We could see short-term pullbacks if we lose some of these higher lows. And for us to be confident we are going to move to a new all-time high, the RSI needs to break. That is the assessment. Let's jump over to Bitcoin. Before we get into Bitcoin, make sure, go ahead and sign up to BitGet, BitUnix, and BingX. These are the exchanges I personally use, and you'll find these exchange links in the description down below. You get a lifetime trading fee discount of 15%, which can build up to 45%, including access to a variety of bonus campaigns, sign-up bonuses, and basically everything else you need. You'll be trading on exchanges I use and I trust, and of course, you'll be supporting yourself by getting access to those bonuses and supporting me making these videos for you. Go ahead and check it out. We'll play an ad, and we'll get right back into it. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay team, let's get straight back into it. So taking a look at Bitcoin, we've talked a lot over the last few days about the macro charts. We've gone over historical patterns. If you want to watch yesterday's video, you'll find out about that. We've gone over, again, historical patterns of similarity to show you visual representations, or examples is a better word, of how the price action may potentially play out. So we've shown you potential fractals. We've used fractals from prior highs. We've looked at consolidation patterns. We've looked at weakening momentum. We've looked at absorption. We've looked at RSI breakouts. We've looked at a whole variety of things to show you a whole variety of different ways the price action is developing, potential risk factors, etc., etc. But the overarching point of all of that, and you can go watch yesterday's video again if you want to, was to show you and explain to you why the price action is in a very delicate position. And to put that in a very simple manner, the reason a price action is in a very delicate position position is because it is sitting on a very important level. Anytime Bitcoin approaches levels that have potential to alter the direction of the trend, whether it be in a positive way or a negative way, we see a lot of indecision develop around those regions. Particularly, again, when we've had interest rates, we've had these conflicts, we've had indecisions with economic policies surrounding trade and tariffs. There's been a whole lot that has gone into influencing the indecision or the unwillingness the market has to make a definitive directional move. But what we do know is the triggers of which these definitive directional moves will begin from. Number one being the weekly range high, which is this level here, and number two being the $110,000 level. And it's a very simple assessment to say if we break above here, we go up, or we break below here, we go down. A lot of low IQ individuals who know very little about trading deduce trading or analysis into that, up or down. The reality is trading isn't up or down. Analysis isn't up or down. Analysis is the nuances, it's the little details that result in you making decisions with statistical probabilities in your side, on your favor, to take advantage of these up and downward moves, right? If it's not just a coin flip, it's not just up or down, there's a whole bunch of stuff that goes into making informed decisions, okay? Whether it be historical data, whether it be confluence analysis, whether it be contextual analysis, whether it be economic news, a whole variety of things. The most important thing here is, though, the fact that if we drop below this weekly range high, we validate what we call a deviation setup. Now, a deviation setup itself is not a macro top signal. It can be, but it is not a macro top signal, but it is a reversal signal. So whether or not that reversal results in a macro top, or whether it results in a flash correction for one day or a pullback for a few weeks or whatever is not the point. The point is to identify where the favor is in favor of the sellers and the buyers. And if we see a weekly close below this level, or the data, whether it be the structural data, which we have here, whether it be the deviation setup of the bearish divergence to confirm it, whether it be the break of the 62.09, whether it be historical fractals that would suggest corrections, we can say that a loss on the weekly level wouldn't necessarily guarantee a correction, nothing is guaranteed, but it would shift the probabilities statistically massively in favor of a pullback to the point at which you need to optimize or rebalance your risk in the market to avoid any corrections that could destroy you essentially, okay? So let's talk about this now. The short-term pattern we have identified and we'll be discussing in just a moment has the potential to confirm a loss of this range high and thus a correction, or the ability to sustain this level, okay? Because what happens on the short term continues to develop onto the higher time frame. If something happens consistently over a long period of time in the short term, eventually that is going to be reflected as a data point in a higher time frame. Okay, that is how things work. So when we're looking at the short term here, we have got a consolidation pattern. Again, how this is developed, why this is developed is completely irrelevant. It has developed. That is what is important. This consolidation pattern is a pennant. A pennant formation is a formation where we have a downtrending resistance and our uptrending support, resulting in tightening of the price action, compression of the price action in a general horizontal manner. The reason it's horizontal because we are generally in this horizontal direction. We have an equal downtrend against the equal uptrend. We have higher lows and lower highs developing. The pennant formation is a neutral pattern, but the direction of we enter, so the direction we point to point one, is generally the direction we exit. So if we were to draw an example of what that means for people who didn't understand that, up over here, we have a pennant over here, we have a pennant over here. Pennant number one, we have entry into point 1, 2, 3, 4, and then continuation, or whether it be the breakout. Pennant number 2, we have entry into point 1, 2, 3, 4, and then a continuation to 5 into the breakout. Again, validating the 5-point rule. For those of you who follow the channel, you would know what the 5-point rule is. It again is my own personal rule I use. It's not a rule you'll find online. It's a rule I've generated and created myself. So according to my 5-point rule, that is how we would confirm these patterns. But most importantly, what we notice is that the general direction of entry is generally, and I say generally because it's not always, it's not a statistical anomaly to see the price action going in the opposite direction. It's just a slight advantage in that direction, meaning if we do see the breakdown of that trend line, we need to take that at a face value. expecting continuations fully based on the measured move of the pattern. So the measured move of the pattern, this is where it gets very interesting. Taking from point 1 to the depth of the channel, which is to point 2, we apply to a perceived breakdown point, would take us to 101.5. Where is that? Well, that is our critical level of support in this higher time frame horizontal consolidation. No surprise. If we then take that same measured move and we assume we actually break toward the upside, where does it take us? It takes us into a major level of resistance, 106.6. Now, you're probably wondering, how does this impact the high time frame? Well, a breakdown puts us underneath the weekly range high. Okay, if we're underneath the weekly range high, the potential to close this weekly candle under the 62.09 level, which would confirm a macro weekly momentum shift, okay, MW, no coincidence, or a breach of this weekly resistance, which would facilitate a continuation to 110. It has the potential to validate the breakdown or confirm this level, holding yet again as an area of support. Very, very important stuff. That is the short term, guys. That is what we're watching. If we zoom out to the short term a little bit more on the 4 hourly, we know a loss of this range low results in the price action entering a low historical resistance range, resulting in a correction. Again, I'm not telling you this to spread fear. Again, nothing to influence people's decisions on Bitcoin. How could I possibly manipulate a multi-trillion-dollar asset by talking to a few thousand people on the internet about Bitcoin? Okay? It's impossible. So the people who say, oh, you just want Bitcoin to go down so you can buy more. Man, I bought Bitcoin at $16.5 thousand. Do you think I want it to go lower? I don't really care where Bitcoin goes. I'm a day trader. I trade up and down. It doesn't matter. The reality is, this isn't to scare people who may think it is. This is to prepare people and to give people an insight to how the price action is developing and what may happen if these levels are lost, all based on historical data. So taking a look again, guys, if we're able to break through the resistance, we could see a continuation to 110. Again, we are in a overall horizontal consolidation. So anything between these levels are expected to be chop. Meaning we could see chop, chop, chop just continue until these levels break. The real definitive high time frame continuation will develop when the chop range ends, when this horizontal channel breaks downwards or breaks toward the upside. And as we said at the start of the video, the up and down points, if we're looking at, we're going to simplify it to the most basic low IQ terms, market up, market down, the trigger points that will establish the probabilities in favor of the market up or market down scenario is the weekly close above 110, which is correlating to that weekly high, okay, or the weekly close below the range high, if you want to put it as simple as possible. That is it for today's analysis, guys. Let's quickly end up on the total. Now, the total is at a very important level. The total is at the 50 EMA. Why is the 50 EMA is important? Well, the 50 EMA is not really a level of support per se, okay? People do, by nature of its use, I guess by it being a very used indicator, I guess turn it into a support, right? If everyone just believes it's a level of support and ends up putting buy orders out there, it's going to become a level of support. That's how the market works. But in turn, it's not really used to identify support. It is a moving average. Its overall use, its primary use is to assess volatility, right? So when we're looking at the price action being further and further away from the 50, we have increasing volatility. Where we have the price action compressing toward the 50 EMA, we have decreasing volatility. So we can use it as a contextual, usually in contextual analysis. At the moment, we are sitting on that 50 EMA, but most importantly is where the 50 EMA is sitting, which is the upper level of resistance of this prior horizontal. This horizontal consolidation, orange line to orange line, the horizontal resistance prior to the breakdown. We are coming to retest that again at the 50. If we lose that level, subsequently losing the 50, we could see mean reversion back to the 200 at the $3 trillion break of structure, which is a high time frame support. If we see that move develop, Bitcoin goes down, okay? Because for that move to develop, Bitcoin needs to go down because the majority of Bitcoin, the cryptocurrency market cap is made up of Bitcoin, as Bitcoin is the highest when it comes to Bitcoin dominance, okay? One more thing, total altcoin market cap. Not confident on altcoins overall at the moment. Simply put, not confident on altcoins until we break this downtrend. If we break this downtrend, we look a little better for a move back to 940. Until then, we're looking sketchy. We'll have some days where altcoins do well. We have some days where altcoins do bad. We'll have some altcoins do well. We have some altcoins do bad. It's really going to be all over the shop because we have just seen this cycle has proven to be nothing more than a rotation cycle where money is flowing from one coin to the next in, some people say, a predictable manner. I would say in a more sporadic manner, okay, more driven by narrative. But in particular, when we are in these periods of this overall downtrend, you should expect a lot of volatility for the price action. So that is it, guys. We just saw the daily candle close this in, and thankfully we were able to sustain above the 50 EMA. Of course, the Bitcoin price action was still very much within that pattern. We look at the weekly, we've got now 3 days until the weekly. So thank you for tuning in. Have a fantastic rest of your day. As I'll leave with one more saying. Pray for the best, hope for the best, but prepare for the worst. And that is really what you need to do when we're trading on invalidation. And I guess if I to summarize what invalidation trading is in a nutshell, okay, it is that. It is praying for the trend to continue so you can continue to exploit the trend, but it is preparing for the worst case. So if that develops, you can capitalize on that, whether it be through taking new positions or whether it be through simply taking profits and exiting the market before it starts to move against you in an aggressive direction and you give back all your profits, okay? There's much more to trading and making money. It is also capital preservation. Thanks for tuning in. Have a fantastic day. Catch you in the next one. Bye.